Hey everyone, in today's video, I'm going to be talking about an ETF that I just bought $5,000 worth of stock in my trading account here. Going to go into my portfolio and go right to the stock. The stock that I just bought over $5,000 of is ticker ZQQ. This is a BMO NASDAQ 100 equity hedged ETF, which means that as the US and Canadian dollars fluctuate against each other, this ETF is not really impacted by that. It's just impacted by the underlying trading value of the NASDAQ 100 stocks. So I went ahead and bought 50 shares of this company, currently up just a couple percent, but it's a pretty volatile one given it's just following the biggest 100 NASDAQ companies, which tend to be a bit more sensitive to interest rates and other macroeconomic factors, since more of their earnings are out into the future. Currently, I have just over $5,300 in the stock here. So I'm going to talk about why I put some money in this stock here today and what my thoughts are about this portfolio, or this position rather, going forward. So before that, I just want to do a bit of an overview of what this ETF is. So for those of you who may not be familiar or primarily invest just in Canadian stocks, this is a great opportunity to get exposure to the US stock market and some of the largest, best quality companies in the world. Some of them you're seeing on your screen here, without paying a foreign exchange fee of 1.5% or whatnot. So as you buy this ticker, it's in Canadian dollars, traded on the TSX, but you're getting exposure to companies like Apple, Microsoft, Amazon, Nvidia, Meta, Google, Tesla, etc. As you keep going down here, even some companies that at first glance you're not even sure if they're in the NASDAQ because they're more consumer, staple, discretionary, like PepsiCo, Costco. You're getting those as well. So I'm just going to scroll through as I talk, but it's just a great mix of companies as I go through the NASDAQ 100. You have a lot of like defensive companies, but it definitely skews more towards risk. You see companies like Palo Alto, Micron, PayPal, more tech-like companies that you see coming across your screen. Even though as we're getting to these lower amounts, these are pretty small portions of the company. What you're really primarily investing in is those big tech companies up top. 6% of the funds in Google, 5% Nvidia, 6% Amazon, 10% Microsoft, 11% Apple. So collectively, that's like 30-40% of the fund just in those big tech names. And lots of people in Canada don't invest in those names just because they don't own US stocks, or they don't want to pay the FX fee or deal with opening a USD account. So this is a great solution in getting exposure, just buying this one ETF and getting the whole basket of stocks. Now, I primarily invest in dividend stocks, as you can see in my overall portfolio here as I just scroll through. But I thought it was a great opportunity to just diversify a bit into more tech names instead of just having all dividend stocks, especially as I look over the last couple of months here. You see last 1 month down about $6,000, mostly some of my REITs, royalty funds. And while I continue to average down in those ones, it's kind of nice to have some exposure in more big tech companies and US growth companies as well. And the way I kind of view it as, it's just a $5,000 position to start. My total account here is just over $200,000. So it's about a 2.5% position probably in this overall account, 4% of the Canadian side of it. And if it goes up, goes on a bit of a run, I may take those gains, reinvest them in other places. If it goes down, I'm comfortable holding the quality of companies in the NASDAQ 100. These are some of the best companies in the world. So I thought it was just a good hedge to put on the market, essentially, putting $5,000 in, seeing where it goes, and using this as kind of a catch-all for investing in tech. Because right now I have a handful of tech companies. Sometimes I'm not sure, should I be investing another $1,000 in Microsoft, another $500 in Google? Should I be buying Meta at these valuations? This just takes all of that thinking out of my mind, and it'll just be the ETF that I buy and sell as a proxy for just that whole basket of big tech companies. a bit more information about this ETF here. So if I go into some of the fund details just up here, one of the things that I'm comfortable with is the management fees here. I know lots of US investors are used to companies having management fees or ETFs having management fees of zero point 0.1 or lower. But in Canada, I think this is more typical. 0.4, 0.5 is what I see on lots of ETFs, especially on ETFs that are with assets from other countries that are not Canadian backed. So, for example, like an ETF like XIC, which is the entire Canadian stock market, has about a 6 basis point management fee, whereas these ones you have to pay a bit more. But I'd say, given that you're getting exposure to a US fund here, essentially, this is reasonable from what I've seen. If there's other NASDAQ 100 hedged equity funds that you guys are aware of that have a lower management fee, be sure to let me know, or let us know collectively in the comments. That would be very valuable. So I'd appreciate that. But I'm personally comfortable paying a 0.35. If I was to buy this and pay an FX fee, and I know there's some ways to get around it, but generally speaking, you're paying a point to a point and a half. So getting 3 or 4 years of like delayed payment by holding this in this account. And this is one that, you know, if it goes up in a big way, I may trade out of it. So I'd rather pay that monthly fee of a couple basis points rather than the 1.5% fee to move it overall. So in terms of dividend, this pretty much pays no dividend, about a 0.3, 0.4% yield. I imagine that they probably take their management fee out of the dividend yield as well. So maybe the stocks on average yield about a 0.7, weighted average yield about 0.7, 0.8. They take their management fee out of that likely, and they pay you the rest, which is just some, you know, spare change at the end of the calendar year. But what is really interesting, or what's really great about these companies within the NASDAQ 100 is from 2010, you can see just the explosive growth that technology has had. And this ETF is just a great proxy to have a great basket of super profitable tech companies, companies that are growing really fast, but may not be consistently profitable yet. Think companies like Tesla and some of those other companies you saw as we were scrolling through. So just putting it out there, wanted to share this ETF for those of you who this may solve a problem for in terms of where to allocate some money that you want exposure to these types of investments. Or if you're scattered across a bunch of big tech companies and you're just saying, screw it, I'd rather just have one place to consolidate all of these holdings into, this is an option for you to consider. Ticker ZQQ on the stock exchange. I'll let you know how everything goes with this position, if I'm buying more of it, assuming it goes down back under 100 and whatnot, or if it's one that I eventually trade in and out of depending on how it runs from here. So quick video today, just wanted to share this buy with you guys. Let me know in the comments what you think about ZQQ, if there's alternative ways you're investing in US big tech, and I will see you guys in the next one. Thanks.